Hi there, I'm Eliza Baven with Financial Standard. Australia's commercial real estate debt market is growing at a rapid pace, fueled by several structural themes, including strong immigration and population growth, and the move away from traditional bank lending. Also drawing investors' interest is the asset class's ability to produce reliable income amid the ongoing uncertainty that we're currently experiencing. So today, I'm joined by Devine, Director of Wealth Management at MaxCap Group, to discuss the opportunities on offer in the commercial real estate debt space. Hayley, thanks so much for joining us today.
Thank you very much for having me.
So Hayley, for those who aren't super familiar, can you explain commercial real estate debt as an asset class?
Commercial real estate debt, CRED, is essentially a fixed income investment with a defined term and rate of return. The quality of such investment hinges on three main factors. Firstly, the underlying commercial real estate. This can range from residential properties to industrial assets, offices, mixed-use developments, and non-discretionary retail. Secondly, the borrower's profile. This includes their experience, financial strength, conduct, and capability. Lastly, the investment manager's expertise, their ability to source top-tier lending opportunities and effectively identify and mitigate risks before starting the investment or lending program and managing these for the duration of the loan. Many investors tend to favour first mortgage positions because they act as the bank and hold the strongest security, representing the senior part of the capital stack with the lowest risk. Higher risk opportunities exist in mezzanine or junior debt investments, which offer higher returns. A well-structured loan is designed with a hold-to-maturity approach, capable of enduring current and future market conditions.
Why is the private credit market growing so exponentially, and in particular, the commercial real estate space?
That's a good question, and it's largely driven by regulatory reform. The Australian Big Four banks had to scale back their lending, opening the opportunity for private credit or non-banks to step in. More tailored, flexible lending solutions compared to bank loans is also important for real estate borrowers with specific requirements. Private markets also offer investors higher rates of return for that illiquidity premium. The size of the Australian CRE lending opportunity, we estimate, is currently just over $490 billion, mostly covered by the banks. As bank retreats for those regulatory reasons, the non-bank portion is growing rapidly, having doubled in size over the past 3 years. In this rapidly growing market segment, look for established, mature managers that can meet the strong transparency standards required by the most sophisticated sovereign and pension investors in the world.
How can commercial real estate debt add value to investors' portfolios?
So commercial real estate debt can significantly enhance investors' portfolios by delivering enhanced returns, providing downside protection, and reducing volatility of the portfolio, not to mention increasing risk-adjusted returns and the negative correlation with listed equities. These characteristics make CRED a powerful tool for portfolio enhancement and risk management. While these benefits apply globally, the Australian market is particularly favourable due to the strong macroeconomic fundamentals, the banking sector structures, and the regulatory interventions, allowing investors to achieve the outside returns relative to the risk taken.
And what should investors look out for in an investment manager?
So investors should focus on the track record, scale, and capacity management of private credit managers to ensure quality and diversification. Selecting experienced managers who can effectively navigate various economic conditions and manage risks. The MaxCap team has a deep understanding of how commercial real estate debt responds to market stress, demonstrated over an 18-year track record through sector volatility. With relationships with the best real estate developers, access to quality investments, and an experienced team across Australia and New Zealand.
Finally, Hayley, how can investors gain access to the opportunity?
Wholesale investors can access the opportunity via our MaxCap Investment Trust. This is our flagship debt fund, offering investors access to high-quality commercial real estate debt positions. Key features include an evergreen structure, which provides ongoing exposure to diversified pools of commercial real estate debt with regular liquidity. 2 product options. Investors can choose between first mortgage and high yield products, depending on their risk appetite and their return targets. Strong returns. The first mortgage product targets net returns of the RBA cash rate plus 5%, while the high yield product targets the RBA cash rate plus 8%. Prudent management. The fund follows strict guidelines on geography, sponsors, and loan types to manage market conditions effectively. Lastly, flexibility and liquidity. Investors have access to liquidity on an ongoing basis, offering flexibility in commitment periods. The MaxCap Investment Trust aims to provide low volatility and an inflation hedge, making it an attractive option for investors seeking consistent returns and robust growth potential in the Australian commercial real estate debt market.
Well, Hayley, thank you again for coming in and helping us to really understand the investment case for Australian commercial real estate debt.
Thank you for having me, Eliza.
And thank you too for taking the time to join us today. We'll see you next time.